Hello, this is Manesh Patel from Ichimoku Trader and LearnTrades.com. Today is December 24th, 2017, and today's topic we're going to discuss Bitcoin, how to trade this safely. Bitcoin and any cryptocurrency has been in the news for the last couple of months due to the huge percentage increase it's going through. It's almost like a bubble that basically was in 2000 with the technology boom, the financial boom that was in 2007, and also the gold boom that we've gone through in the last couple of years. Okay, so we really need to discuss how to sit there and trade this product safely with good money management. If you don't trade it with good money management, which is low risk, high reward, you're basically gambling, and you really don't want to do that, especially now where Bitcoin's been overextended for such a long time. You want to make sure you trade this product safely so you do not give back a lot of profits or you do not lose a lot of money. And that's exactly what we're going to do in this workshop today. Before we begin this workshop, let's go over our normal disclaimer. Disclaimer basically states this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be copied or distributed without our written permission. We are broker neutral, so we support all the broker charting platforms out there, from TradeStation, eSignal, TradingView, and so forth. In today's presentation, we're going to be using TradingView to analyze the Bitcoin currencies or any other cryptocurrencies today. Now, as we mentioned, a lot of people are talking about Bitcoin. In fact, Bitcoin's now being talked about from every person, from a waiter, a taxi cab driver, due to brokers, traders, and so forth. So this thing has gotten to pretty much every corner of the world, to every type of person out there. Why does that matter? This is something that we have to discuss, and one of the things that we have to address is Bitcoin in a bubble? If Bitcoin's in a bubble, that means we have to sit there and treat it a different way. If Bitcoin's not in a bubble, then we have to treat it a different way. So we need to recognize that. But I want to kind of show you something I've learned with time and to discuss that. So the very first thing, let's talk about trading in general. If you look at a fact, 98% of retail traders fail. Think about this. You're a retail trader, okay? You may think that you're an institutional trader, but majority of everyone out there is a retail trader. In fact, you should think your worst case scenario that you are a retail trader. And you should have that mindset that I'm a retail trader. How do I sit there and turn the corner from a retail trader to an institutional trader? 98% of retail traders fail. That means majority of the thought process that retail traders go through is a failing thought process. Okay? So if you think about this, if you follow the crowd and do what everyone else does out there, then you have a 98% probability of failing. That is not good at all. So you need to be careful on what you do in listening to people and do your own unique thing. Do not follow the crowd. That's the number one rule I have as myself as a trader, because the moment I sit there and follow the crowd, now I'm gambling. I'm basically becoming a stat and becoming 90% of a statistic of people failing, and you do not want that at all. So you need to make sure that you sit there and analyze all the research that's out there and do not follow the crowd and do your own unique thing and follow your trading plan. If you look at my career, and you could find me on LinkedIn, you could see recommendations and stuff like that for my entire career and so forth. I basically graduated in 1996 as an engineer. I worked in the telecom field, and basically in 2007 I jumped ship from telecom to the financial world to start to manage money. That was only possible because I'm part of that 2%. I'm a retail trader that turned the corner. And I did not do that by doing ordinary things at all. I did not follow the crowd. So you have to sit there and go against the crowd and follow your philosophies, follow your trading plan, and execute it to a T. It does not matter the market conditions or anything like that. You should be basically following your trading plan, setting up your orders, and waiting for the market to come to you, you not chasing the market. So the thing is that when you start looking at Bitcoin, you need to make sure you're not following this hype that's out there, and you're following your trading plan and be part of that elite 2% that does make it, and not be part of that 98% that fails. Let's now begin the workshop and discuss how to trade Bitcoin. Before we could discuss how to trade Bitcoin, we have to characterize the market that Bitcoin's in. What is this product doing? A lot of people are talking about this product being in a bubble. If the product's been in a bubble, that means we have to sit there and trade it a certain way because it's very volatile. So the very first thing we need to do is recognize if Bitcoin's in a bubble or not and adapt our trading plan to this particular characteristic, this market condition. Okay, so how do we do that? The only way you could do that is look for past price action to repeat itself. So what we're going to do is we're going to look at some past bubbles, specifically the technology bubble that occurred in 2000 and the financial bubble that occurred in 2007. We're going to look at those two different bubbles, see what characteristics they had as bubbles and what caused them to deflate, and we're going to see if Bitcoin's in that same situation, and then at that point characterize it as being in a bubble or not. To analyze the previous bubbles, we need to establish our trading system. A lot of you guys know that we're about Ichimoku and the IMTF technology, the multiple time frame technology. Some of you guys don't. So what we're going to do is we're going to establish the rules for our system so you understand exactly what we're doing when we look at charts. Okay, this is the Ichimoku system. You have a cloud here. It's very, very basic and very simple to use. Okay, if price is closing inside this cloud, it does not matter the color of the cloud at all. It basically means we're consolidating, we're going sideways, not an environment that you want to trade at all. If price is below the cloud, that basically means the instrument's going down, it's bearish, and at that point you should be thinking about or executing trades to basically bet on it going down. If price is above the cloud, then basically the instrument's bullish, trying to go up, and at that point you should be established in a bullish position or looking to enter a bullish position here. Okay, so these are the rules here that you see. One other rule I'm going to give you is this green line here, this green line that keeps on moving. That basically is the container of the trend. If we're above the cloud, you want price to be above that green line and holding that above there all the time. As you could see, once we got above the cloud here, this instrument kept on going up, 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 and we're looking for it to keep on going up until it closes below the green line. Once it closes below the green line, that tells you that bullish trend here, this upward trend is over in a temporary situation or could be a permanent, and we'll talk about that more later. But this is basically the template we're going to use to analyze the bubbles of the past, and we're going to use this same template to analyze Bitcoin to determine exactly what state it's in today. So here's a technology bubble and bust in 2000. I actually started my trading career in 1996. I rolled this bubble up and then I rode this whole bubble down. That was not a good experience at all going down, and this is pretty much where I learned my lesson not to follow the crowd at all. As you could see here, we got above the cloud here. This was back in 1996 and above. We've been above the cloud. We were above the cloud. We maintained that green line, which is basically the container of the trend, and all of a sudden right here in late 2000 we closed below the green line. When we close below the green line, that basically means profit taking is going to occur. Okay, profit taking occurred, and this is all the profit taking for all this big run up here. Profit taking occurred all the way until here. When we close inside this cloud, that's telling us that too much profit taking is occurring, and at that point we're in a deadly situation where this thing can no longer go back up, or it's going to reverse and go basically below the cloud, and at that point it could sit there and go bearish. In here, we close inside this cloud, and then all of a sudden we close below the cloud. When we close below the cloud, at that point, basically tell us the pullback was too much, and now we change situations to a point it's going bearish, and that's not good at all. Okay, in this situation here, you have a nice little bubble that's occurring. The moment you close below that green line, you need to be very, very careful, because that's when profit taking is occurring. If you rode this upward trend here, you need to make sure that you've taken profits off the table already, because you do not want to sit there and trade the scenario going all the way down here to the cloud, because if it ever closes inside this cloud, it's got a high probability of reversing, and at that point you could lose all your profits and also lose more. So you don't want to do that at all. So we always look at situations here is that in here we take everything all the way up, 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 up. We maintain that bullish position until we close below the green line. After we close below the green line, we're pretty much exiting our positions, and that way we're not riding this potential bubble here going down. Okay, and you could see that this bubble here busted right here as soon as we broke the green line and closed below it, and you can see the huge downward movement here that's occurring there. Okay, that's the technology bubble. Here's a financial bubble here. Oh, by the way, these are monthly charts for all the different products out there. Okay, so here's a financial bubble here. You could see here basically late 2004, it closed above the cloud. That's basically when you should start thinking about it being bullish here. You can see a green shaded area. This is basically a bullish setup here that we have with our IMTF technology. And you could see that basically it stayed above the cloud here and stayed above the green line here all the way here to late 2007 here. And that's basically when profit taking started occurring, or another word a lot of people use is a major pullback here. You could see a major pullback or profit taking is fine as long as price remains above the cloud. The moment it closes inside the cloud, that's when profit taking occurred too much, and at that point it has a high probability of reversing. And that's exactly what happened here in about around August or so of 2008. It closed inside the cloud, and from that point on, next month after that, it closed below the cloud, and this basically tanked here and gave back everything here for the SPY here, and that's basically when the bubble busted. And you could see here that this bubble busted. The first characteristic that you see always is that it stays above the cloud and above that green line on a monthly time frame. The moment it closes below that green line, that's basically indicating when that bubble has a high probability of busting, because that's when the first profit taking long term is going to occur. Okay, so that's the two characteristics that we've seen in the technology bubble and the financial bubble that we've seen up to this point. And if you go look at the gold charts too, when gold was going up, you'll see the exact same thing too. And this is pretty much a characteristic that we've noticed with all the bubbles that got basically established a bubble and then have busted. So we basically ride the bubble going all the way up on a monthly time frame, and the moment it closes below that green line, the container of the trend, at that point we basically are exiting our positions, because that's when we believe the bubble is about to bust. Okay. So here's a monthly chart of Bitcoin, BTC USD, and you could see the monthly chart here. We've circled here the areas. Basically it got above the cloud here, and you could see here it basically got above the cloud here in about I would say, let's say May of 2016, and since that point it's maintained this green line, has never closed above below it at all. So basically this is a bubble that's being created here, huge percentage increase. It means you could keep on riding this bubble all the way up over and over and over, as long as it doesn't sit there and close below the monthly green line. So this bubble is still being established, and you could still trade this thing even though it's volatile, and you could see how volatile this is with the bars. You could still establish this going up. Okay, the only question now is that how do we trade this bubble? Okay, and you could see here I've circled points here. Every time it touches that green line on a monthly time frame, we're looking for opportunities on the lower time frame for trades. So you could see here in, I would say after May here in 2016, there was an opportunity where it touched the green line. We started looking for trades there. Here around May again in 2017, we started looking for opportunities there. This was around after September, October. There was an opportunity here. It basically touched the green line there. And you could see this month here, it touched the monthly green line here, a little below to 10,000. And at that point, we started looking for opportunities there. So from a high level point of view, all you have to do is sit there and look at the monthly time frame. When it touches that green line here, start looking for buying opportunities on the lower time frames, looking for setups and stuff like that. And at that point, you have a high probability of succeeding. And if you keep on doing that, you'll notice there's 4 opportunities here, 4 trading opportunities that allow you to enter safely with huge money management, high reward, low risk type of scenarios. Now what we're going to do is observations on the charts and look at opportunities when to trade. Our philosophy is always multiple time frame analysis, because that tells us exactly what the day traders, swing traders, and long-term traders are doing. So what we do is we look for signal on the higher time frames of tell us when to start looking for a trade, whether it be bullish or bearish, and at that point look for a confirmation with a setup on the lower time frames. And that's exactly what we're going to do today. We're going to look at observations of when to start looking for trades. Okay, so here's Bitcoin in 2016. We're going down to a weekly time frame. Notice once it got above the cloud here, what we're doing is we're looking for it to hit the green line. Why do we always look for it to hit the green line and look at opportunities there? Well, the green line is the container of our trend. When it sits there and comes to a green line, that's the boundary condition between it being bullish or it being profit taking. And if you sit there and look for orders around that opportunity, that green line, when it hits that green line, and look for setups on a lower time frame, that basically tells you you're going to have a low risk, high reward scenario. And that's exactly what you see here. You could see there was an opportunity here, here in basically 2016. If we move forward a little more going into 2017, you can see it right here at the beginning of January. There was an opportunity there. March, April, there was an opportunity here. Basically back in August, July, August, there was an opportunity here. Here we reached close to the green line. We didn't quite get to the green line here, and you could see there's a cross here. That's a multiple time frame support. So we actually looked at an opportunity right there too. Even though we didn't hit the green line, we had a multiple time frame support right there. So we entered there too. Okay, so you could see that these are some of the opportunities there. And this is the current chart right now, and you could see every single time that we enter this trade. Okay, so we basically look at on the weekly time frame, when we hit the green line, we look for a buying opportunity. The other thing that we look for are these crosses here. These crosses tell us there's a multiple time frame support or resistance. So you could see every time we got a cross and price hit that cross, we started looking for a buying opportunity. So there was them there, and there. So not all the time we'll hit the green line. We have no problems with that. As long as we hit the green line or we hit a cross, at that point we look for a buying opportunity. By doing that, we basically look for pullback trades or breakout trades on the lower time frames to keep our risk low. And at that point, we basically take the risk off a lower time frame and we take the reward off a higher time frame. This basically allows us to achieve a 3-to-1 reward risk ratio or higher. And the way Bitcoin's been going with a huge percentage increase on price is being allowing us to get 100-to-1, 2,000-to-1, and so forth in some opportunities. And we don't predict that to be there. We're only looking for 3-to-1, but we'll take whatever the market gives us. Now let's look at some of the trades we've posted on social media. Why is that important? You always need to validate the person that's basically on these workshops. The best way is to look at what they've posted on social media, because if they're willing to post to the entire world, you know that they actually executed it. So the very first thing we're going to look at is our post. Basically here is September 28. This is when we talked about Bitcoin basically holding the support and then basically trying to get this major resistance here. So you could see that basically we're looking at a buying opportunity here at this major support here, and then looking for it to get to this resistance at least, and then watching it to see if it was going to break it or not. Okay. Here's the current chart of Bitcoin. You could see we're looking at right there, and you could see that this was a support here. It held after going up, did some profit taking here, and then look what it did. It just took off with vengeance all the way up there. So you could see that this support was very, very critical, and you could see the huge percentage increase here on price here. So you could see that after this week's holding the support, this thing moved over 16,000 points up there. Okay, so that was a huge, huge support that we caught here, and we basically published on social media before it occurred. Let's look at another post here. Okay. This is September 14. We're on the daily time frame. So we're showing you different time frame opportunities and trades and stuff like that. And remember, we're keying off a lot of opportunities off higher time frame. On daily support, we talked about this being a major support right there, and we're looking for basically Bitcoin come down to this point right there. So you had a nice bullish trend here that occurred basically in 2007. At the beginning of 2007, there was a setup here in August, basically broke out here. The trend started going all the way up. The moment we close below the green line here on the daily time frame, we know profit taking is going to occur. We're looking for that profit taking to occur to about right there, and then we're looking for it to stop and reverse. Okay, here's that same chart now, and we basically moved forward. You could see it came to our support here at 29.83, held that support, and then basically took off up here and went up drastically here, 3 times more than basically where the support was here. So you could see that our support levels here are really, really good there. So these are 2 posts that we posted where you could see exactly the opportunities that we're looking at, the support levels where we wanted to buy. And notice that price got to our support levels, bleeped a little below them, but pretty much held them. So our risk is low, our reward is high. And that's exactly what you want to do in order to trade a system and not gamble. Okay, this is Bitcoin August 2011. This is a 60-minute. You could look at breakout trades. So this is a opportunity here on a 60-minute with our technology, IMTF technology. Red basically means you have an opportunity to go bearish. Green basically means you have an opportunity to go bullish. These blue lines here, basically the blue dots here, represent the breakout levels. So you could see it broke out here, went up, up, up. These green dots basically are our trailing stop there, and you could see that this instrument here broke out around 3,500, and basically if you follow the system here all the way without looking at overextension, it basically got out here, stopped out here for a nice little profit here. So you could see that basically we could sit there and trade this opportunity off our IM technology of any time frame, 60 minutes, tick level, and so forth. Okay. The next topic we want to talk about is diversify. A lot of people are talking about Bitcoin, and that's it. Believe it or not, you have to diversify. And there's a lot of opportunities that are giving you nice percentage increases just like Bitcoin or more. And let me give you examples. These are some of the things that we posted on our social media. December 9th, 19, there was basically a stock instrument here, ZBH. It gapped up with over 15 to 1 reward risk ratio. We have a green shaded area here. We basically bought at these crosses right there. You could see we bought there. Our risk was right there. Our stop was right there. And you could see our reward. So this is a 15 to 1 reward risk ratio. This is a 1,500% in 1 day. Okay. So you're getting the percentage increases just like Bitcoin. This is December 19, ETR. We basically looked at this with options here. It broke out there. We had a support down here. And this is basically a 3 to 1, a 300% gain over 2 days. Okay, this is another one. This is DE stock here. This is a 1 month trade. We basically placed the trade November 17. Remember, these are all on social media. We posted. We did a option here. We initially bought a call here and then turned it into a vertical. We basically collected a 16,000% gain of 1 contract right there. And you could see these are things that we post on social media. So these are the gains we're looking at. This is a live trade here. You could see we posted all this information right there for you. Okay, so one key thing to note is that please do not get hooked up on Bitcoin. Wait for your opportunities on Bitcoin to occur where it pulls back to a green line on daily, weekly, or monthly. And at that point, enter with a low risk, high reward type of scenario, and make sure you're diversified, because as Bitcoin goes up, there's a lot of other things that are going up and a lot of people not noticing them. And basically, that's the area you want to be, because that's not where the crowd is at all. Okay. If you guys have any questions, you guys are more than welcome to post them here. You could email us at info@eiicapital.com. I hope you guys have a Merry Christmas, Happy Hanukkah, and good holidays. I'll see you guys in 2018, where we're basically going to be launching new technologies, simplifying trading, and sit there trading probabilities down to a T. We call it precision trading. That's what we're going to launch for 2018 is precision trading. Exactly where our entry is going to be, exactly where our stops are going to be, our preserve mode where we're going to tighten up our stops and take some money off the table, and also targets.